What's going on, everyone? We have a couple more filings. These are very similar in nature as well. We have ISE, which is the International Securities Exchange, parent company of NASDAQ, basically. We have them. We also have GEMX from NASDAQ, filing very similar, and it's to reduce their options regulatory fee. Okay, so that's what they're going to be doing. It's the ISE and the GEMX are the two filings that have filed this. We may have more. Let me check real quick. No, okay, that's not the same one. Let's see if SIBO did the same one. Nope, not the same one. And NASDAQ stock market. Okay, that's a completely different one. Okay, so as of right now, we just have GEMX and that's an important one. GEMX and NASDAQ ISE, both filing to reduce their options regulatory fee. Now, what does this mean? So, basically, the ORF revenue and monitoring of ORF, basically what this is, the exchange monitors the amount of revenue collected from the ORF or the options regulatory fee to ensure that it, in combination with other regulatory fees and fines, does not exceed regulatory costs. They don't want their fees to exceed their costs. In determining whether an expense is considered a regulatory cost, the exchange reviews all costs and makes determinations if there is a nexus between the expense and regulatory function. The exchange notes that fines collected by the exchange in connection with the disciplinary matter offset ORF. Revenue generated from ORF, when combined with all of the exchange's other regulatory fees and fines, is designed to recover a material portion of the regulatory cost to the exchange of the supervision regulation of member customer options business, including performing routine surveillance, investigations, examinations, financial monitoring, and policy rulemaking, interpretive, and enforcement activities. So, regulatory costs include direct regulatory expenses and certain indirect expenses in support of the regulatory functions. Basically, just going over what they spend their collected fees on, explaining what the ORF is, options regulatory fee. It's designed to recover a material portion of the cost of the exchange, of the supervision and regulation of its members. Now, the proposal, based on the exchange's most recent review, the exchange is proposing to reduce the amount of ORF that will be collected by the exchange from 0.0018 per contract side. That's per side. So that's 0.0018 per contract side. So combine both sides, it would be 0.0036. And then they're going to reduce that to 0.0014 or 0.0028 on both sides. The exchange issued an options trader alert on December 31st, 2021, indicating the proposed rate change for February 1st, 2022. This goes into effect tomorrow. So, February 1st, they will have more incentive to buy options, more control through the market and options. That's what we're all about. So, members should be getting jacked about this one. So, that's basically what it is in a nutshell. And they said they're going to continue to monitor the amount of revenue collected from the ORF to ensure that it, again, does not exceed the costs. So again, that's basically what it is. This will go into effect tomorrow.